feel that will provide value to participants. And today's topic we're really excited about because it deals with student loans, and that you'll have an opportunity to ask questions. We're really excited for our guest speaker today, Jennifer Rodriguez, who is with credit.org. And before she starts her presentation, I just want to make just a quick plug with regards to fair lending. Our commitment, and partnership to the San Diego Housing Commission is to provide educational workshops that really align with the mission of helping families and individuals achieve homeownership. And one of the themes that we always like to remind uh, everyone during this process is specifically on fair lending is the fact that you do have some protections when it comes to any type of credit discrimination. In past workshops, we've reviewed those buckets of financial buckets per se that lenders look at in order to determine the possibility of obtaining a credit loan, a mortgage application, right? None of those buckets include your race or ethnicity, your national origin, your religion, your gender, marital status, your age, or your receipt of income, your income categories. None of that plays a factor, and it's always important to bring this up, is because if you are in a position where you're applying for a mortgage loan, you're going to come across these questions that are referred to as the HMDA, the Home Mortgage Disclosure Act questions. Well, they will ask about your race, your ethnicity, and your gender. At times, people might think, why would someone care about knowing my race or ethnicity or gender, right? Since they do not participate in the credit decision of a mortgage loan application. It's not really to identify or to exclude people. It's really to make sure that the lender that you're working with is helping different communities equitably. So I just want to make that statement, that plug, that your race, your religion, your national origin, your gender, marital status, age, or any type of receipt of public assistance income does not play a factor in the decision making of a credit loan application. So with that, I'm very happy to be bringing and introducing our next speaker, Jennifer Rodriguez. A quick story about Jennifer is that I, previously to working for Citi, used to be Jennifer's colleague working at credit.org and the families at Springboard. Jennifer brings many years of experience in the financial space, specifically around credit, around budgeting. She's a phenomenal facilitator of homebuyer classes. She resides in the Inland Empire, but she is gracing us with her presence today in this great virtual workshop about student loans and the information that you received today. Jennifer can share a little bit more about some of the additional services that are available at credit.org, if in the case you see value in them. But you are in a safe environment, so in the chat box, Juanita will be monitoring the chat box, so feel free to ask questions, and we will have towards the end of the workshop some minutes set aside to go over your questions. So with that, Jennifer, take it away and welcome.
Thank you so much, Sergio. Thank you for such a lovely introduction. And then, I also want to thank Juanita and the San Diego Housing Commission for inviting me to do today's presentation. And we are going to go ahead and talk about student loan debt. So let me go ahead and share my screen. And thank you everyone so much for being here too. All right. So the name of my agency is credit.org. Like Sergio mentioned, I have been with the agency for quite some time. I'm actually going on 16 years now. And I'm very proud to say that, just because I've pretty much, I've actually been at the San Diego Housing Commission there um, helping individuals with their budget and their credit. So I've done counseling. I'm an educator. I'm doing the educator role now, which I also love. Just because it's very important for us to learn as much as we possibly can about finances. We don't really get a lot of information from school. I would say we don't get, anything really about personal finances. And then when we're talking about obtaining debt, it becomes something very easy for us, but at the same time, we don't learn much about it. We could avoid getting ourselves into debt, how to manage debt. And so, a very particular or very important type of debt would be student loans, and that's what we're going to talk about today. So thank you all for being here. Now, I do want to tell you a little bit about our agency. The name of our agency, again, is credit.org. We've actually been around for quite some time. We've been around since 1974. The name of our agency was Springboard. We still operate under the Springboard name, but we do business as credit.org because that is also our website. So if you have never heard of us, you can go ahead and visit our website at credit.org, which again is also our name. We do offer personal financial education, and we offer assistance in regards to money, credit, and debt management. And we do all of this through educational programs. And then we also do this through supportive services such as counseling. Some of the stamps of approval that we have from very, very important agencies, we are accredited by the Council on Accreditation. And this agency basically makes sure that all of our counseling, all of our education, all of our material that we have on our website, that everything is held to the highest standards, that you get good quality services and good quality information from our agency. We're also members of the National Foundation for Credit Counseling, and this is the largest and the oldest entity in the nation that actually provides all of the education and the training and the certification for us to be able to assist individuals. So any counselors or any educators that you come in contact with our agency have all actually gone through the NFCC for education and certification as well. As Juanita was mentioning, we are also certified by the Department of Housing and Urban Development, and that's because we also offer a lot of information, classes, and services related to housing. So if you guys are looking for, to purchase a home, which I think most of you are, we do offer the first-time home buyer workshops. And then with that workshop, you also get a certificate, which we're kind of going to get to a little bit later on. I'll give you more information on that. But we also do offer housing counseling, anything related to rental, foreclosure prevention, pre-purchase counseling. So we have several services that are related to housing. And again, we have HUD's approval to be able to do that. And then we're also members of the Better Business Bureau as well. So just to tell you a little bit about the services that we have credit and debt counseling. We also do the financial educational program. So we do financial seminars. We do have a lot of free material on our website that you could actually have access to. And then we are also invited to do fabulous workshops like what San Diego Housing Commission is doing today. So we're very happy to be here. We also do the debt management plans, student loan counseling, homeowner assistance, foreclosure prevention, like I mentioned earlier, the first-time home buyer educational seminars, reverse mortgage counseling, and then we also do education and counseling services related to bankruptcy. So if you are a first submitting or applying for bankruptcy, once you have your bankruptcy discharged, we do counseling sessions both before and after. And these sessions are actually mandated by the Department of Justice, which again, we are one of the agencies that are allowed to do these types of services as well. All right, so what is student loan debt, right? A student loan is money that you borrow from the federal government or a private lender to help pay for college costs. You could pay for your tuition, you could pay for any supplies, school supplies, books, and also living expenses. So these types of debt basically not only pay for your education, but anything that supports your learning improve your learning environment, right? So if it's housing, if it's books, living expenses, it takes care of you during that time, so you could so you're able then to focus with your studies. while you are actually attending school. So it basically covers pretty much everything. Now, there are different types of loans. If we're talking about student loans, there are direct loans, and these types of loans are actually loans that are made directly through the Department of Education. There are a couple of other types of loans, for example, the Perkins loans. And these loans are distributed through the university or through the school as opposed to the Department of Education. And these sometimes can be consolidated. And I'm going to talk a little bit about what can and cannot be consolidated because it's going to make sense a little bit later on. We also have the Federal Family Education Loans, the FFEL loans, and these also may be consolidated into a direct loan to take advantage of newer repayment options and public service loan forgiveness programs as well. And we're going to talk about those too. Federal loans do not require credit history or a cosigner, and the interest rates on the federal loans tend to be lower than a private loan. Now, this could be seen as a positive, right? Because you don't need to prove that you have good credit. There aren't really, many requirements to be able to get this loan, and you don't need a cosigner, right? However, this alone makes it easier for individuals to think, hey, it's really easy for me to get a loan. I'm going to go to school. And then if I finish and I want to go ahead and pursue maybe another type of career, maybe get another, a type of certificate or something that goes well with my career path, I could just go ahead and take another loan out and then continue my education, right? So yes, it is very easy for you to be able to get a student loan. However, there are a couple of other cons that go along with these loans, and we're going to discuss those as well. We're going to talk about those too. Federal loans offer benefits like income-driven repayment options and forgiveness opportunities, and we're going to talk about those as well. Oops. All right. Another type of loan that you have is a private loan, and a private student loan is like a federal loan because you can cover the same type of expenses, so you can cover all of your college and educational costs and needs, but they don't originate through federal loans. It's not federal funding. It's basically just like a regular, typical loan that you would get through a bank, a credit union, or an online lender, again, rather than the federal government loans, right? The private student loans may be used to fill a college payment gap after maxing out your federal loans. Not to say that this is something that's promoted or recommended. Of course, if you could stay out of debt, that's probably the best thing ever. But if, let's say, you were able to get a student loan and that did not cover all of your school expenses and tuition, and you need a little bit extra money to be able to help you kind of, finish your education, generally a private loan is then something that, would become an option where you could actually borrow with a regular bank or credit union, and be able then to cover those expenses. If you do have any type of federal loans, definitely go ahead and use those up first. Don't have your federal loan and still have money sitting there and then go and get a private loan, just because, again, the federal loans have a little bit more options if in case something was to happen and you need to benefit from a program to repay the debt, or maybe do a forbearance, and we're going to talk about that as well. The private loans, these loans also require a good credit score and proof of steady income by either the applicant or a cosigner who meets these requirements. So you could go ahead and apply for it yourself if you have good credit, if you have steady income, or you could also have someone join you in the loan. So have a cosigner that actually meets those requirements. Again, good credit and steady income. Now, the credit is going to be something that's going to determine what type of interest rate you're going to get on that loan. So depending on your credit score and how well you are doing with your credit, that may either be a positive thing because you'll get maybe a pretty good rate, or if your credit is a little low in regards to the credit score, then that would then be a disadvantage because now you would get a loan with a higher interest rate and less options to be able to assist you if in case you were to have some type of financial hardship. If you don't know, let's say you have student loans now and you don't know exactly what type of student loan you have, it's always really good to keep track of your student loans, what your balances are, where you are at with your loans and the type of loan that you have. If you're not too sure about what type of loan you have, you can go on to studentloans.gov and you could find out more information there about, the federal loans, any repayment plans, enrollment dates, all of the service information on your account you'll be able to find there. So avoiding default, that's very important. Of course, once you get into these student loans and you go to school, you're hoping that as soon as you graduate and you get your degree, you're able just to go out there and get yourself a great job, start your career, and finish paying off these debts. Default's not really a thing that you think about. And it's not something that's talked about when you're actually getting these loans in the beginning, right? Maybe it's briefly mentioned, but it's not to the point where you fully understand exactly what can happen, if you default on your loan. So a student loan, if you were to default on a student loan, it can come with major negative consequences. And we're going to cover these right now. Defaulted loans will be reported to the credit bureaus generally 90 days after you default on the loan. That information will then be sent to the credit bureaus. And of course, the credit bureaus are the agencies that hold all of your credit information and basically report on how you manage your debt. Right. So if you have some negative mark on your credit report, that will bring your credit score down, and it will, it will taint the score for about, it depends what type of loan you get, and I'm going to go over that in a little bit too. But generally, the statute of limitations for any negative marks on your credit from a defaulted debt would be 7 years. So the statute of limitations is actually 7 years. But again, if it's a different type of loan, as in a federal loan, it could actually sit on your credit report pretty much forever, right? There could be levies placed on certain assets, including your home. So let's say you finally get yourself into a home. Let's say you do have student loans right now, but you're able to borrow, you're able to purchase your home, and you're in your home already. And then something happens where you have a financial hardship, and then you default on your student loan. They can actually go ahead and place a levy on your property. So if you ever try to sell it, they will be able to then pull the funds that you owe for the student loan before you actually getting any type of equity from the property. Of course, the bank would be the first one to go ahead and get any type of monies that maybe are pending on that mortgage. But other than that, if there is any type of equity left over that would be, that would come to you after a sale, let's say, that wouldn't be the case. That would mean that the student loan levy would be paid off first before anything. Your federal taxes or other benefits can be confiscated. So again, if you're expecting a refund and you go ahead and you file and you don't get your monies, it's probably because you have a default with the student loan, and that money is then absorbed by that to be able to pay for that outstanding student loan debt. Wages can also be garnished. Okay, so that's not good when you have wage garnishments, because sometimes it's already difficult enough to be able to manage with what you have, which is maybe the first reason, why you actually defaulted on the loan in the first place. Now, by them being able to garnish your wages, that makes everything a lot more difficult when it comes to just managing your month to month, especially if you're looking to save money to be able to either pay off other debts or maybe save money for a down payment to purchase a home. That's going to make it very challenging. Social Security also. So when you retire and you're expecting your Social Security income, at that point, they may be able then to reduce those Social Security benefits as well. And also, they may be able to take legal action against you, and that would be in form of a lawsuit. So you could also be sued for the outstanding amount if you default on your student loan. Other things that may happen as well is schools may also hold your records, including any type of academic transcripts, and that's going to be, it's going to be very difficult for you then to be able to maybe find a job or seek any type of additional education, because you will need those documents to be able to either get your job or be able to pursue more education. And again, this is just depending on schools, and it also depends on the states. Only a handful of states actually do that. I'm not sure if the state of California actually does that, but you may want to find out directly through the schools. So avoiding default. So again, when it comes to the credit issues, what kind of credit issues can you have? So when I mentioned the delinquencies, yes, the delinquencies will be reported to the credit bureau, and that's after 90 days of your default that you've not paid your student loan. Unpaid federal student loans will remain on your credit report for 7 years from the date of your first delinquency. So if you fall delinquent on your debt today, that information will remain on the credit report for 7 years. I believe it's actually 7.5 years, because the thing is that they allow you to defer for 6 months after you finish your studies. And so it would be 7.5 years from the first default that you made, or the first delinquency. Federal loans are not subject to statute of limitations, meaning that you can be pursued for the outstanding debt for an unlimited period. All right, so that information basically says, hey, if you don't pay your debt today, it doesn't matter if the 7 years go by, that information will basically remain on your student loan. I'm sorry, on your credit report, because it's a loan that has not been paid off. So this isn't something that could just fall off and be forgiven. This is actually something that stays on your credit report forever. In regards to bankruptcy, just like you, whatever you learn, you retain hopefully forever. Unfortunately, when it comes to the student loan debt, it's pretty much the same deal. Okay. They cannot be discharged in a bankruptcy. So if you're thinking, oh my gosh, I can't pay and I've got a bunch of other debt, I'm just going to file bankruptcy. Unfortunately, you're not able to do that. There have been very, very few exceptions that have been made for bankruptcy, but it's almost impossible to have it removed or just forgiven. So again, if you're thinking that maybe that's an option for you, just understand that when it comes to student loans, these cannot be submitted into a bankruptcy. Having outstanding student loans or any other type of debt also is something that doesn't allow you to borrow as much as you would like when you are looking to get other types of loans, and especially when we're talking about a mortgage loan, right? So if you owe more, that basically just means, hey, you're a bigger risk to the lender. They may be able to allow you to borrow, maybe not as much as you would like. And maybe it would also be at a higher rate. So I just kind of want to bring in Sergio at this point, and maybe Sergio, if you just want to add something on there in regards to the student loan and how much debt, or what's the amount of debt, and how much does it not allow you to borrow if you're looking to get a mortgage? And I don't even know if I asked that correctly.
No, I follow you, Jennifer. No,
Okay, good.
absolutely. So for student loans, most lenders, what they'll do is, even if the payments are in deferment, where you're not technically required to make payments, the lender will calculate 1% of the outstanding student loan balance and plug that payment into what's referred to as your debt to income ratio. So for those of you that have attended some of our previous workshops, you know that that's really important, the debt to income ratios, because that essentially determines our affordability, determines our purchasing muscle. So I can definitely come back to this in the Q&A section, Jennifer, but
Sure.
that's typically how lenders look at it, is they assess or they calculate a payment based on a percentage of your outstanding loan balance, and it's usually 1%.
Perfect. Thank you, Sergio. So when it comes to the student loan debt, if you're combining that with other outstanding debt that you may have, and then you look at maybe low household income and maybe very little savings, that does create a big challenge. And so you have to look for other options to be able to overcome that, either working with your student loan servicer, also maybe looking to see if there are any other types of programs if you're looking to purchase a home. So for example, benefiting from down payment assistance programs. And like Juanita and Sergio were mentioning earlier, one of the classes that we do is the first time home buyer workshops. And that workshop is a full 8-hour day. And you get to understand exactly what the whole entire process of home buying is, from beginning, when you're looking at your budget, and how to track your expenses, how to be able to save, and then moving on to your credit, why credit is important, how to improve your credit, to improve your chances of getting a better rate on your loan, looking for a real estate agent, working with a lender, getting a pre-qualification, and again, looking at options in regards to rate comparison. So checking to see who is going to give you a better rate when it comes to the lenders, the types of programs that are available for down payment. So like I mentioned, down payment assistance programs where you don't have to save the 20% for a down payment, but you may be able to have an opportunity to get a program where you could only, you only need 3% down. There's several different programs that are available. There's also programs available for closing cost assistance. So there's many programs available. And then we also talk about, once you have your keys, what do you do? Once you're a homeowner and escrow closes, what do you do to protect your assets? So that's the whole entire course, basically. After you're done with that course, which is a full 8-hour day, you do get a certificate from our agency, and that certificate basically you could gel along with your loan product to then be able to use or benefit from the down payment assistance or the closing cost assistance programs. So, and I'm sure we're going to talk about that a little bit later on too. All right. So again, benefits are available to avoid default. It could be either by loan deferment, a forbearance, or maybe a repayment plan and a possible loan forgiveness. And we're going to talk about those as well. When it comes to the repayment plan, these allow for more affordable monthly payments for you, depending on how much you actually have or what your income is like. These payments are calculated as a percentage of a discretionary income, and these are based on your income and your family size. After 20 to 25 years of repayment in a plan, the remaining debt can be forgiven or is forgiven and possibly taxed as income as well. All right. So if you've missed a payment, or if you're having trouble making payments now, what you want to do is you want to immediately contact either your servicer or discuss any type of options that you may have with any organizations that either handle your loan servicer, or you may also want to contact a nonprofit credit counseling agency to obtain student loan counseling. Now, the student loan counseling is very important because a student loan counselor can actually help you either, assess your financial situation, your current financial situation. So they'll go over your budget. They'll look at, if you have a hardship right now, they'll look at your current financial hardship. And then at the same time, they'll go ahead and see, what type of options you may have available to you to avoid default. Or if you've already gone through the default, if you are already behind on your loan, they will go ahead and assist you with making a three-way call with the collection agency to go ahead and set up options to bring your account out of default as well. If you don't know who your servicer is or you don't have that information, you can call the Federal Student Aid Information Center, and the numbers on your screen. And then if you want more information and tips on how to be able to get yourself out of default, you can also go onto studentaid.ed.gov. And then everything else that goes along with that. But you'll get a lot of really great information from that website as well. All right, so there is something called a public service loan forgiveness. This program actually began October 1st of 2007, and that was basically with the first loan forgiveness happening in 2017. The reason why it took 10 years is because generally that's how long it takes for you to make payments to then be eligible for this type of forgiveness program. So the borrowers must make 120 monthly payments. So again, 10 years on time payments towards your debt, right? The payment must also be made to a federal direct loan. Payments must be made in qualifying federal repayment plan. So they must know that you are in this type of plan to then, or this track, I think they call them tracks, to then be able to have your debt forgiven after the 10 years. And then after the 120 payments, all the remaining student loan is forgiven tax free. Okay, so that's one of the programs. Now, for that, there are certain career paths that are eligible for this. So you would have to then go and check to see if your type of employment actually fits within the requirements for this type of benefit. Now there have been some changes now because of COVID-19, and this is pretty recent. in regards to the repayment relief, payments are suspended and interest is waived for federally held student loans until September 30th of the end of this year, or yeah, September 30th of 2021. The suspension counts towards public loan service forgiveness programs and then the default rehabilitation programs as well. Borrowers do not have to recertify for income-driven repayment plans until they are actually notified. Also, tax and social security withholding. So like I mentioned, if you do default on your loans, if they are either taking your income tax return or any type of withholdings from your social security, those are actually suspended for the time being. Also, employers are instructed to halt any wage garnishments for borrowers who had wages garnished after March 2020. Now, if an individual, for whatever reason, they slipped through the crack and they started doing the wage garnishments after March 2020, they could actually have those wages that were garnished refunded to them. It is a long process to do it, but they are able to get those funds back if they had a wage garnishment after March 2020. Collection activities to defaulted borrowers, like phone calls and mail, those are also paused for the time being. Again, that's until the end of September this year. In regards to the programs for the service, what is it called again? I keep forgetting. It's a long name. Let me go back. The public service loan forgiveness. So if that's the type of program that you're in right now, let's see here. Those payments are also paused at this time, and that started in March of 2020, and this will extend until the end of September of this year as well. That's a total of 19 months, so that's actually pretty good. If a borrower is on public service loan forgiveness track, this pause could provide nearly 1/6 of the required payments for free. And then the student loan counseling can actually help individuals better understand what type of options they have available to them, such as partial student loan forgiveness. So again, if you need to talk to a student loan counselor, they could definitely help you with that as well. Who can receive assistance? Student loans, those that are federally held by the Department of Education, those are automatically eligible for this type of assistance. The current relief excludes 9 million federal loans that are commercially held. So unfortunately for those who have private loans, those are basically excluded. However, also some of the federal loans, like the federal family education loans and the Perkins loan, some of those unfortunately are also excluded from this program as well. So you would have to, again, see if you fall under the specific rules to then be able to benefit from those programs, or maybe speak with a student loan counselor to see if those options are are something that you could actually have for yourself. All right, so that's pretty much all for me. And then Sergio, we were going to talk about borrowing when an individual has outstanding student loans.
Mhm.
So tell me about the not the debt management plans, the debt to income ratio, sorry.
Right. So just like just like with any other type of financial obligation, the lender looks at your ability to repay back the debt, in addition to your housing payments. So your debt to income ratio, and more importantly, your housing debt to income ratio looks at your capacity to pay back that monthly housing payment. Your overall debt to income ratio, in the lending industry, we call this as the back end ratio, takes into account your housing payment and your monthly obligation. So going back to, if I have student loan debt, even though I'm not required to make payments at this time, the lender still allocates a certain amount to plug into that ratio, knowing that in the future I'm going to have to start making payments on this. So that essentially can limit my capacity. If I'm paying back my student loans now, then whatever that amount is plugged into your debt to income ratios. If I'm in a position where I'm in default with my student loans, that's where, things get a little more challenging, is because any lender will not move forward in a loan application without first making sure that you have your hands wrapped real tightly around your student loan obligations. I know Jennifer mentioned this earlier, but student loans is something that is not uh, discharged in a bankruptcy. It's similar to like child support. It's similar to back taxes, where these are like, you know items that take priority. Um, not to say that if I have a old credit card debt, I don't have to pay that back, but unsecured debt is not as big as a priority as student loan debt, just because, once again, it's debt that does not go away. So
Sergio,
yes.
Sergio, they're having a little trouble hearing you. They say you sound a little muffled.
Oh, I am so sorry. I am so sorry. Okay, I will. Okay, is that better? I've increased my volume. Hopefully that's clear.
Yeah, that's better.
Fantastic, fantastic. So, just to recap, right? My student loan monthly payment is taken into account within my capacity, within my debt to income ratio that is determined for my purchasing muscle. If I'm not making payments on student loans at this time because I'm in a deferment plan, the lender still calculates an amount, but typically around 1% of the outstanding balance. There are specialized programs depending on the lender. They may have specialized programs that will allow you to allocate a lesser amount. For instance, an income-based repayment plan, allows you to make payments on your student loans amounts based on your ability to repay back the debt. That is something that your student loan servicer, would have to agree upon first. And if your lender allows for that, they simply plug in that amount into your debt to income ratios. So if I have a student loan payment and my true payment amount is, say, $300 a month, but if I qualify to be on an income-based repayment plan, and now based on the plan, I'm only able to make $100 student loan payments, then that's the amount that the lender will allocate, $100 instead of the 300, to plug into my debt to income ratios. That essentially can be the difference between me being able to purchase a home versus me having to wait a little bit longer to try to pay down that student loan debt. So it's definitely a good conversation to have if you're in this process with your housing counselor, a credit counselor, or your mortgage loan professional, to really understand how student loan debt impacts you and how you can, once again, wrap your hands around making sure that you are able to make those monthly payments.
Sergio, so the question is,
Yes.
for those that don't understand, the debt to income ratio, or the more debt you have, the less ability you have to buy a home. I mean, to pay for the home you might be qualified for, right? So
Right.
that could be the difference between a $500,000 loan and a $300,000 loan.
Exactly. Absolutely. And I'm assuming that people have been in our previous workshops, but I can explain debt to income really quick. If you just picture a circle, right? The circle represents your monthly income, right? Kind of like a pizza. Part of that circle has to be allocated towards your housing payment, and part of that same circle is allocated towards your monthly obligations. So your debt to income ratio, right, takes that circle and allocates a certain section to make sure that your housing and your monthly obligations are being met. How big of that section will depend on, once again, on the program and on your circumstances. But essentially, if you have a whole lot of monthly obligations, hence student loan payments and like credit cards and auto loans, most of your circle is now being absorbed by these obligations, which limits your housing allocation. So debt to income ratio, once again, it's a percentage that a lender calculates to determine how much of your circle of your monthly income can be tied to your housing payment and your monthly obligations.
Thank you, Sergio. I think we usually say that for every 500,000, they lose about $500 a month. They lose
Mhm.
about $100,000 of lending power. So if you want to buy a $500,000 home, you qualify to get a loan for 500,000, but you have $500 a month in payments, a car payment, credit card debt, student loan debt. Now you're only able to buy a $400,000 home, if that makes sense.
Exactly. Do we have any other questions?
We have a question here. It says,
Yeah.
I'm consolidating my loan. My loan is $12,000. I got my statement to repay the loan at $36 a month, but the interest is $4,000, which now is over $16,000.
I'm not sure I understand the interest rate on the loan.
It's compounded, it sounds like to me, over a number of years, right?
So are they giving us a total of all the interest that's been,
Yeah, so it says, do the student grants, are they tax exempt?
are the grants tax exempt?
Well, a grant, first of all, a grant is a gift. It's not it's not something you have to repay. You only repay back loans, correct, guys?
Correct.
Right. So absolutely. So a grant, say that, it can either come from like the school. Some of those grants are not are tax exempt. Other types of grants, such as like scholarship grants, maybe there might be some taxable income that you would want to make sure that you understand. So typically, yeah, it is safe to assume that it is tax exempt, but you definitely want to check with your tax person, depending on your tax, depending on where you fall in your tax bracket, will make a big difference. So that's, usually when we go into these tax type of questions, the standard disclosure, right? Check with your tax person, because your situation might be slightly different than, say, Jennifer's situation. So Jennifer may not be, she may be tax exempt, but essentially someone else could have some tax repercussions.
Right.
What
And
I'm assuming they're asking is, if it's all right that that's $4,000 of that they've been charged $4,000 in interest. And most of these loans, I think, guys, they are charged compounded interest, right? Over time.
Right, especially if you haven't made payments on it, the debt will accumulate. It sounds like if the payment was $35, that may have been some sort of either workout where they're first trying to set you back on a track, meaning have like a consistency in making on-time payments before they can restructure your debt again. But yeah, you could be in a position where your monthly payment is less than what the principal and interest payment is. So essentially, instead of bringing down your balance might be slightly increasing. So it's really important to really understand, even if it's a workout option or workout agreement, to understand exactly what you're facing. And I think Jennifer did mention, there are some resources at your disposal, that you have at your disposal to really understand, how whatever you're being offered is really going to play out.
right, because a lot of those programs are pretty much just set to where the consumer could actually just bring their account out of default or current, and then for them to be able to make monthly payments, but that doesn't necessarily mean that you're going to see the balance go down. And then in regards to the grants, yeah, definitely talk to a tax professional. Generally, anything that's given to you above a $600, amount, that is definitely taxable. You'll get something, in the mail. It's called a 1099 form, and then they'll go ahead and tax, whatever was above the $600. But again, that depends on the type of grant as well. It could also depend on your tax bracket, your income bracket. So definitely talk to your tax professional about that.
Well, thank you, guys, because it's saying that they understand, that you gave a great explanation, Sergio. You too, Jennifer. I'm currently on student loan deferral and incurring interest. Any way I can get out of postponing or shopping the interest?
Well, I believe when it comes to the interest, that's basically going to stay the same for now. Going back to what I was mentioning in regards to the programs that they have or the things that they have in place right now for COVID-19, I would definitely, let me see if I could go back and I could share the website so they could actually go on there and see if they are eligible for any types of programs so they don't have to send in the payments. At least I believe the program was running from last March 2020 to the end of September 2021. So I'll get that resource up for you right now.
That's great. While you're doing that, Jennifer, somebody's asking, they have a private loan, but that they're a co-signer for with Wells Fargo for $3,000. And Wells Fargo has sold the loan, and now they're being asked to fill out a number of applications, and it's hitting their credit to see how, and they want to know how they can handle that.
Right. Unfortunately, for those who have co-signed for student loans, whether they be the federal or basically the private loans, they're still 100% liable for the debt as if it were their own. You know, if the bank sold the loan off to a servicer, there shouldn't be anything new. I'm not sure exactly what applications there should be. It should be a smooth transition to where there's just another lender servicing the loan. Do we have any more detail on that?
It's not given anymore.
Okay.
It's just
What-
saying that they're having to fill out enough applications, and they're hitting my credit. I need help on how do I handle this situation?
So I can, I mean, just by, once again, there might be more details, but just from what we're hearing as to the question, if your credit is being ran, that to me is a new loan. So it's either some sort of refinancing where you're going from one entity and you're trying to better, say, the rate or lower the payment with another entity. If they're running your credit, that means that there's a new loan in process. What shouldn't happen and so this is like a kind of like a red flag. Even if, like Jennifer said, even if the loan is sold, meaning the servicing of where I'm sending my payment to from Wells is now another company, another bank, another institution, you should not have to reapply for that same loan. The loan's already done, so there shouldn't be any other reapplication. Now, there might be some sort of update of information, like contact information, address. If I'm applying for any type of say,
You should have told me you need like
workout.
socks when we go to the store.
Sorry, who's that? They can mute themselves.
Yeah, so if you're applying for any type of workout assistance, the lender should tell you, or the servicer,
But I
if a credit's required, a new credit pool is required. But it sounds to me like that's like
How's it
more of a
work out?
refinance.
Sorry, guys, let me mute that person. I don't know who it is that's talking right now. I don't see the.
think that
Okay,
might
so
be
whoever
muted already.
was talking can please mute themselves because it's distracting for the rest of us. Sorry. Thank you.
Well, I kind of had a question, because the thing is that generally if you go ahead and you pull your credit report, you're going to be able to see anyone who pulled your credit, whether it be a hard pull or a soft pull. So if it is a hard pull, you're not only going to see that they're pulling your credit, but you will also see that your credit score is being, is coming down, just because that will have some type of negative impact against your credit score. However, sometimes servicers or collection agencies will do a soft pull on your credit. And if that's the case, the information will still come up on the credit report, but it's not gonna hit your credit score negatively. So I don't know what you're actually seeing on your report, if it's a hard hit or a soft hit. Regardless of anyone, asking credit information from the credit bureaus, that will be, you'll see the entities that are actually requesting that information. I just don't know what type of pull it is. But the only easy way to see is if your credit score is going down, then that would be considered a hard pull. And like Sergio was saying, that would usually happen if you are trying to make an attempt to obtain new debt, which I'm hoping that's not the case. And it should be just like I mentioned earlier, a smooth transition where if that is the case, maybe they still wanted to go ahead and view your information as a soft pull, but it didn't cause your credit score to drop. So I don't know if you noticed your score dropping, if it's a hard or a soft pull, but that's all the information I can give you.
We have another question here, and it says, thank you, Jennifer and Sergio, for that. And it's saying, is it true that after 20 years, the student loan remaining balance is forgiven as long as I haven't defaulted?
From the program that I mentioned earlier, that's actually for 10 years. So if you made your payments for 10 years every single month on time, then the remaining amount that is actually forgiven. So it's not the full 20 years, but it's only for certain career paths. So for example, if you work for a nonprofit and you've been working for the nonprofit for 10 years and you've been making your payments on time, then the remaining of the amount that's outstanding, that would be forgiven. Is it just like, hey, whatever you've been doing, whatever career path or whatever job, and you've been making your payments on time for 20 years, does that automatically just forgive the rest? That's not the case for that particular question. That wouldn't be the case.
Perfect. Thank you. I kind of figured based on what you said that if they weren't part of this particular program, it probably wouldn't apply.
Now, one of the things that I wanted to mention, Juanita, I know you probably have some questions, but one of the things you had mentioned also when we talked earlier, you said everyone really needs to be prepared with all of their information. And so a couple of things that you had mentioned as well is knowing the type of loan that they have, knowing their
Yes.
balance, right? And then you also mentioned them knowing when the loan was originated,
Yes.
having their PIN number to access their account. So did you want to go ahead and talk a little bit more about that as well?
One of the things that is really vital is that, first of all, you need to understand that a student loan is that, a loan. A loan is a debt. It's a bill that you've incurred, which means you have to pay it back. And when it's a federal loan, that's even longer because it's not going to go away. So you need to know how much you actually owed originally. When was the original date of the debt? What was the original balance, interest rate, all of that stuff? And if it's been sold. If it's been sold, usually you're going to have it going from one person to another. You need to know who those people are, and you need to be able to talk to those people and find out what's happening with this loan. Why am I getting charged so much interest? Is there a way that I can reduce that interest rate if I pay it down? What if I start making larger payments? What if I pay right now during this forgiveness period? Will I be able to get a better option? These are things that you need to look at based on your particular loan. If the school's closed and you weren't able to get a degree, or you weren't able to get or work off this program because the school did something unlawful, there are ways for you to apply for forgiveness that way. But there has to be paperwork, there has to be a paper trail, and there has to be documentation in order for anything to be pursued. So just be aware that this is what we were talking about. It's really important that you understand that the student loan debt is going to affect your ability to get approved for a home loan. And that's because what Jennifer mentioned earlier. What if somebody lends you money to buy a home, and then there's a lien put on the loan on the home because you weren't able to pay your student loan debt? This is why they are very particular about you having either very low student loan debt or having it in some kind of a payment process already. So if you have not even made one single payment on any of your loans and they keep increasing and increasing, you need to look at, how do I start to make some payments on this so that it looks good when I start to make my application for a home purchase? If you get into the program that Sergio was talking about, which is the pay as you earn, in some cases, you're not paying a lot of money on these. They're paying $5, $6, $10 a month on these loans, but it's looking better for you because you're actually making a payment. Do we have anything else to add to that, guys?
I'll just, add in
Yes.
terms of,
I have a question. I know it's like with the forgiveness program, I believe. I was on it. I can't remember if I did the 10 years, but I have been consistent with paying my my student loan. I still have remained from 40, now it's to 11 for the past 10 years. I did kind of like where I would do every paycheck, I would do weekly, and that kind of helped me like with the process of reducing my interest. And now it's like I'm taking advantage of the pandemic situation right now, which is good. But to me, it's like, how would I know, let's say if I hit like the 10 years, so do I have to write them a letter stating that I had completed my 10 years and then now I should be forgiven, or does that come automatic? Because mine, I believe that my son, it's almost 9, and I've been paying before that. So I wanted to know, should I continue or not? Because I know every year I do the paper, I'll fill it out through my work so they can be able to sign it to send it out to them. So if they're keeping track of that, then I should be off with the 10 years. So if I didn't hear from them, do I have to write them letter, or are they supposed to let me know? Or should I continue making the payment? I know that I'm close to finish, but 11,000, that could do something for me and my kids. I'm just kind of confused if I should be able to continue paying, send them letter, because they're quiet.
I think the safest bet would be for you to not assume that anything is automatic. You just continue to make your payments. If in case you do make payments past the 10 years and you are on the right track, because they need to basically know, what track you're on in regards to your career path, just continue to make those payments. If anything happens, then they'll just have to, refund you those funds. But don't assume that anything is automatic and you're just going to stop making payments because you think it's been the 10 years. So I would really, I would recommend that you check to see if they already have documentation of you being on that program. And like Sergio was saying, documentation is going to be very important, because they need to make sure that, you have been making all your payments, that you are on the track. They call it a track, to complete this program, and then let them close it out. But you have to have everything in writing. I would say definitely communication is important, and continue to make your payments, not assume that anything is automatic. And I don't know, Sergio, if you wanted to add anything more on that.
I'm sure you should have like a contact of you mentioned something about every year you send a form to your employer and to get filled out. Definitely check in with that contact as well, in case things change along the way. But it sounds like you're definitely on the right track, and you've done this for a while now. So the fact that you brought down that debt from a high to where it's at now, I mean, it definitely seems like you're at the last stride here. So that's good.
Thank you.
So thank you all. I'm just looking
Well,
to see if there's any other.
I have a question.
Yes,
um,
Chauncey.
Yes, ma'am. So actually they mentioned some sort of class and some sort of certificate, and I'm very interested in attending that.
I put the email for credit.org on the chat, and so that you could go on there and apply for the class. So I will also send it to you via email. To anyone that attended, if you didn't catch it on the chat box, I put it, it's www.credit.org. Okay, you need to go onto their website and schedule the course there. Okay.
And my last question, I did go to a school that closed down. So I feel like I need to talk to somebody. They actually said that I qualify for forgiving that loan, but I don't know what I'm doing. So if someone could please help me.
Talk to Sylvia. Sylvia, your work readiness specialist, she's also a credit counselor now. So she can give you that information. She actually asked me for the studentaid.gov website, and I sent it to her. The forms are there. So for anyone that needs any of the forms to request any type of repayment plans or anything else, let me know and I'll send you out the link. But Jennifer had it on the website here as well. During this workshop, she had it at the bottom of one of the credit reports, one of the screens.
And I
Okay.
could also provide,
Okay.
I could provide the slides to you, Juanita, so if you want to share them with everybody, you can.
Yes, we'll send it out so that everyone has it. Yes?
Yes, because they said that my loan can, since the school closed down, a lot of my friends got that loan forgiven, but I didn't graduate from there or anything. So I need help getting that completely forgiven. I don't
Okay.
know what to do.
Talk to Sylvia. I'll send out the information though, okay?
Thank you, ma'am.
You're welcome.
And quick question, sorry to hold you guys up. This is Samani. I am wondering for the courses that is being provided from the credit.org, because I was just filling out the information while the class was going on. Is there any fee that it's required, or everything is considered it's free for the courses?
In regards to the services that we provide, some of our counseling sessions are free. However, for the student loan counseling itself, that one is $125. And I think that's definitely the counseling session, and that goes along with also assisting you with working directly with your student loan creditor as well.
And then the 8-hour one certification course is how much, Jennifer?
That one is currently $15, so that one's really good.
Okay, guys, $15. That's what
Yeah,
she said.
depending on funding, right now we have it at $15, so that's actually really good. And we're also doing it via Zoom, so you don't have to go to our classes. You could do it from home.
Okay.
Perfect.
So having the certificate, what does that help me with? Sorry for asking so many questions.
So that's good. I can answer that, Jennifer. So the certificate provides you eligibility access to specialized programs such as down payment assistance, any type of community lending program where when we say specialty programs, these are programs for the most part designated for first-time home buyers and offer benefits that allow individuals and families to either say put very little down, or like I said, use down payment assistance in conjunction to their first mortgage. So they're specialized products that can help you achieve home ownership. And I believe their next class is on April 10th, if I'm not mistaken, Jennifer.
All right, thank you so much, and sorry for holding you guys up for 8 minutes.
All good, all good.
No, it's okay. We understand. I mean, it's important that you understand the process. So if you have questions, please feel free. Sergio is right. I mean, they have Citibank has a home run program, which is 3% down. 2% of that can be a gift, and there is no mortgage insurance, for example, Armani. And his program requires that you have that certificate in order to qualify for it. Okay.
So he's the guy that I should go to when I'm ready after class.
Well, one of his
you.
real estate people, one of his, what do you call them? Lenders?
Home lending officers, and I know Juanita was being kind enough to plug in our programs and services, but the class actually is good for all lenders that offer specialized programs. So just definitely I'll definitely take credit all day long, but it definitely there's other partners as well that provide support to organizations such as San Diego Housing Commission and credit.org that offer specialized programs. Yes.
They would help with our programs, the down payment assistance, Jennifer's programs that have some. Bank of America has some. I think Chase. There's all the different lenders are required to have specialized low income programs since the fall, I think, of 2008 or something of that nature. And so, but they require that the lender or the person applying for these loans complete the 8-hour certification program. Okay,
And that's $15.
yes,
15. Oh, okay. So do you cover that or do we have to come out of pocket? I don't mind coming out of pocket.
out of pocket. That's not something that
Oh.
we are able to apply for, qualify for. I mean, pay for.
Okay. Well, I think I'm gonna sign up for that. That sounds really good. I mean, it's just good to have, even if I like, I mean, I'm thinking about buying a house, but I don't think I'm in the position to right now. But just in case, how long does the certificate last for?
That's a good question. The certificate actually doesn't have an expiration date.
Oh.
And it really just depends on the type of program you're looking at and what lender
Okay.
you're working with. Some lenders may be okay with you having, let's say you took that class in the last 12 months, they'll be okay with that. Other programs will say, you have to take the class within the last 6 months. So it really just kind of depends on those requirements. But yeah, it doesn't have an expiration date.
So
And what's the title
I
of
can take
the
it?
course?
Yeah, that was my question too.
Oh, it's the home buyer education class. That's what it is. If you go onto our website, you're going to see a home buyer orientation. That's a very short, just kind of like, hey, this is what home buyer, things are that you should maybe start looking into. But what you want to do is you want to do the home buyer education course, because that's the full 8-hour day. And that's where you get the certificate.
I just put the website on the chat once more, and I will send it out to everyone again, okay?
Perfect. Thank you.
Jennifer,
Perfect.
thank you. Thank you so much. I've gotten some really great reviews here. The meeting was wonderful. Some of them had to leave. They had to go back to work, but it was very informative. They want copies of the decks, and thank you very much for all of the information provided.
Great.
So I again thank you with all my heart for you guys coming on and doing this for us. Really, truly appreciate it. And everyone that's on now, I mean, we're trying to talk Jennifer into coming in and doing another one on bankruptcy and home ownership. So hopefully we'll have that one soon. We'll be talking to everyone. Thank you guys for showing, and we'll talk to you soon.
All right, thanks again, Jennifer. Bye, Juanita. Bye, everyone.
Thank you. Everyone.
Bye.
Bye. Thank you.
You're welcome. Have a good
Welcome.
day.
Thank you.
Bye.